Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So recently I've said I'm going to do a portfolio update, and I was planning initially to do the usual buys and sells and so on, but I decided against that, and I've realized that I have not done this for a while. We have not looked at every single company in this portfolio recently to see whether they're overvalued, undervalued, what I'm going to do in the long run. And I have I've got a plan to InshaAllah rebalance the portfolio at some point in the next, I don't know, 4 or 5 months, depending on how the market is doing. What I mean by rebalance is selling some of the shares that I have in certain companies and then buying more of the companies that I feel like will be a better suited for this portfolio. Now, I've started this portfolio, I think, if we look at back, this is amazing that now we can do this. Recently, we couldn't even hover over and get any information out of this, okay? Right, so this portfolio started, I think it was about 20th of May 2020, okay? Since then, I've been adding my own money every single month. Every single year, I've managed to max my ISA account. And as you can see here now, we've only added about 4,000 since April of this year. But I've actually maxed this £20,000 allowance every single year for the last 4 years. Now I still have to add about at least £16,000 between now and April. And the reason I started this portfolio was, of course, at the time I've done a lot of research. I knew a lot about the stock market, and I just learned so much. And I thought, you know what, I'm gonna, instead of leaving my money in the account, I'd rather invest it and at least in the long run. And I'm not saying you get this every single year. Basically get 7 to 10% over the period of 5, 10, 15 years from now, rather than that money sitting in an account where inflation is eating away. And that was my initial. So I've done my research, I found Sharia compliant companies, I've learned all of those things, and then I started sharing my journey with the community, because I felt like there was not that many people out there that were genuinely sharing whether they were, you know, making a loss or making a profit. And I've since then, you know, you guys appreciated what I was doing. There's about 7,000 of you guys that have joined the journey. Numbers don't mean anything to me. The most important thing is that we can reach out to a lot more brothers and sisters to actually help them, as well as, you know, helping us as well, because we learn from each other as well. So since then, I've been adding money every single month, okay? I do reinvest every penny that I get. So whether it's a price appreciation, so if I quickly show you here, if we look at his basic orders, for example, we made over £7,700 in terms of the realized gains. And when it comes to dividends, we made about basically £5,000. All of that money is being reinvested back into the portfolio. So my actual initial, basically money that I've added in this portfolio is actually this. When you click transactions, you will see that it's about £84,000. The rest of it comes from that price appreciation, and as well as the dividends or you know, capital gains that we've got. Because it's also a basically an ISA account, I don't have to pay any taxes. And now you guys have that in the US. If you are watching from the US, and we do exactly the same, and we get that £20,000, we don't an allowance every single year. Anything we sell, any dividends that we receive, but we don't pay any taxes, which is quite nice. So as you can see, this is where we are. We've been here for quite some time. I have not added any fresh money as much as I used to anyway, since June, I think. And a lot of that is because I've been working on other projects, but inshallah I would be adding a lot more in the next few months, as I need to maximize my ISA account. So that's just to kind of give you an overview. The other second thing I want to say is, instead of buying an ETFs, why am I buying individual stocks? First of all, I really do enjoy doing the research, and I actually do enjoy learning a lot more about the companies and so on. ETFs is a passive way of investing. If you are new, I would definitely recommend it. But for me, I feel like this is better for me for now. In the long run, I would be switching from this to ETFs, but at this point in time, I want to focus more on buying high quality companies and holding them in this portfolio. I'm building my own ETF. So I hope that makes sense, just to kind of give you guys the overview of what I'm doing here and why. So inshallah, I'm going to continue buying individual stocks until a certain time. I will also be adding a couple of ETFs as we go along over the next couple of whatever years. But for now, my focus is just to buy individual stocks. So what I'm going to do now is I'm going to share with you guys the entire portfolio, every single 26 of them, and then tell you exactly what my opinion is and whether I'm buying more or holding it or selling it and so on. Okay, so here's the portfolio in basically using my own spreadsheet that I've actually shared with you guys on the Patreon account. If you've joined us, you can get access to it. You got access to a lot of things, and it includes the dividend trackers and so on. So if you want to join us, you can do that there. So as you can see, this is how much I've invested. This is basically the portfolio update that I've just shared with you guys. And then in terms of return, it's about 10% so far, and that's basically what's reflected in there. And the dividend, total dividend basically earned so far is about this much right now. It's slightly different to basically what is shown on the others. I couldn't be bothered to update it exactly. Dividend income, I'm expecting about £2,200 basically from the companies that I own right now, and the portfolio yields are just over 2%. Now the yield on cost is 2.3, which is quite nice, and there are 26 holdings. And as you can see here, that this is basically how much I've invested every single year for the last, basically this, I've not updated this recently, but as you can see, this is how much dividends I've received. Now in terms of dividends, we are actually on track now. Let me quickly show you here. Okay, for basically for the month of September, we've already received almost £80, and I'm expecting over £300 this month, maybe closer to £400. Hopefully we can beat September 2023, and we will take it from there, inshallah. We'll see. In terms of overall, £1,119, and last year we made £1,683. So hopefully we can actually get more, basically make more than what we did last year, which will be absolutely amazing. And I think we can easily do it, because September is basically quite a good one, and December as well. As you can see, these 2 months is where I actually get quite a bit of money, inshallah, from dividends. So we will see where we are by the end of the year, inshallah. I will continue to share that with you guys. Now what I'm going to do now is just share with you guys the basically the 26 companies that we own in this portfolio, and we'll go through each. What I'm going to do is I'm going to share with you guys each sector at a time. So we're going to do sectors, so otherwise we will be here forever. And I'm just going to give you brief information about the company and what I'm doing moving forward, inshallah. So we're looking for the company, the sectors, the shares, so how many shares I own, market value, so how much it is right now, whether I'm up and down. You will see that total gains or loss. We will see whether basically, like I said, up or down. Dividend income I'm expecting from this company. Then we will look at Morningstar valuation, whether what the fair value is for this for them. Seek Alpha or Simply Wall Street, I used to both of them. For the UK companies, I used to Simply Wall Street, and Seek Alpha I've used to the for the US companies. How much, what their fair value is, and then whether I'm buying or selling, and then the buy price. If I buy price for me. Okay, so basically what I'm thinking I should buy in these companies. That can easily change, guys, so don't just rely on that 100,000%. okay, so I'm just gonna share that with you guys for now, but that can easily change depending on the company and so on. Right, so let's have a look at the first sector. And as you know, the first sector is the technology companies. First company is Intuit. As you know, Intuit have been in the portfolio for quite some time. I only own 5 shares. I do own it also in the family portfolio. This company is the company that's basically, they have a product called TurboTax, Credit Karma, QuickBooks, and MailChimp and whatever. They've got loads of different types of products that helps people to file their taxes in the US and so on. And as you can see, I've got 5 shares right now. I'm about £140 right now. Dividend, I'm expecting about 11%, basically over £11 in terms of dividend. Now this company is not in this portfolio just for the dividends, although they do have some really good dividends. So they've got safe dividend. They just the rate and the yield is not a lot, but the basically payout ratios and everything else is basically very small, which is quite nice. They have excellent in terms of when it comes to earnings per share is growing, free cash flow is growing. When it comes to total sales, as you can see, is also heading the right direction, and operating margins of free cash flows and return on invested capital. Everywhere you look at, basically this company is doing well right now. According to Morningstar, they're saying it's fairly valued right now. $550 per share is where they think it should be. According to Seeking Alpha, is 14%, 15% upside from where we are. $715 per share from them. For me, is a hold right now, because my average is about 500, so I'm gonna wait until it hits that. If it gets to, in fact, my average isn't 500, if I remember correctly, it's 546. Okay, so if it comes down below my average, then I'm planning to add more. And in fact, if it comes back down to that spatial side of things, I would actually be buying aggressively. If it comes back to 500, that can happen. Anything can happen in this market. We've seen it, what's happened to Nvidia's and so on. Next one's Broadcom. They reported yesterday. I think I might do a video. If you want me to do a video, just let me know. The earnings was absolutely fine. There was nothing to worry about. But what Wall Street wanted, they apparently didn't get it. I just need to look into more details. As you can see here though, I've got over £3,000 in terms of total gains, which is really nice. The dividend is very good. It's fairly valued right now. $155 per share is where they think, or basically if you look in the Seeking Alpha, they're saying $192 per share. For me, still hold. If it comes back down to at least 100, which was, I think it was 120 after the split, when they did the split. If it comes back down to that sort of a price, then I might be looking at it. Next one is Qualcomm. Qualcomm's been in the portfolio a very long time. As you can see, I'm up about 675. At one point I was up over £1,000, but over what's happened over the last couple of days, it wiped off a lot of my gains, which is absolutely fine because the market, stocks do go up and down. Dividend, I'm expecting $64 per share. It's fairly valued right now, $180 per share, 34% upside from where we are right now according to Seeking Alpha. $217 per share. For me, it's still a hold. If it hits about $125 per share, I would be looking at the company. Next one is ASML. I did a video recently, so go watch that if you haven't seen it. Basically, I'm up about $335 per share. This is the one that is getting closer to my fair price, so it's about 600 right now. Let's see where it is. 600 is my target. Is not getting anywhere near that. In fact, is okay, 600 is my actual average. 750 is where it is right now. So like I said, maybe I'm not being too realistic, but if it comes back down to below, I don't know, 750ish maybe, 650, then potentially, so another 100 off where it is now, potentially I might maybe look at it again. And that's why I said this can easily change. So I'm just kind of giving you a rough idea where I think it should be. One I'm definitely buying right now is Salesforce. Salesforce has come down quite a bit recently. In fact, if we just go on CRM, what I want to see a year to date where the company actually is. So a year to date down about 7%. So they haven't been doing well at all. And as you can see, it's a strong buy from Quant. Wall Street saying is a buy. Seeking Alpha is saying is a buy. And I think it is, according to, it's fairly valued at the moment. So $290 per share is where they think the price should be. And as you can see here, let's go to Salesforce in the portfolio. You can see it's $243 per share, and basically $290 is where they think it should be. So it is a buy right now. I would definitely be buying more of that. So that's the technology companies. I'm not selling any of these companies anytime soon. And how I actually built this portfolio is, you've got these high growth companies, and when I say high growth, I'm not talking about safe high growth companies. All of these companies have a positive earnings, been around for a very long time, very monopolistic in terms of, like, for example, ASML and so on, where in the markets they operate, and a lot of them have excellent free cash flow, all of these amazing things, and they are growing really massive, like 10 double digits, majority of them every single year. And that's why I call them basically high growth. They are very safe growth companies that have been around for quite some time and so on. And I also have companies that are not growing very fast, that are in the portfolio for dividend purposes. So for these tech companies, all of them, I'm not looking for the dividends, I'm looking for the price appreciation. And as you can see, alhamdulillah, it's done well so far. Okay, we've lost quite a bit in the last couple of days, but they've done really well overall. Okay, right, the next sector that we're looking at is the one that is the opposite of almost the tech companies, and that's the consumer staples. Now, consumer staples, when the market, so the people always say to me, why are you buying these rubbish companies that are not doing well, so and so. I need to build basically a balanced portfolio. I can't just have high tech companies in there and just leave it. You have to have when you're building a portfolio or even ETF, you have to diversify, and this is my way of diversifying. Sometimes it pays off, sometimes it doesn't, but consumer staples are those type of companies that actually done well over the last couple of days. If you look at some of the consumer staples companies, they've done way better than when these guys were losing, I don't know, 10% every single day. these guys were gaining about 2-3%. So you need that defensive kind of companies in your portfolio, and that's why they're there, and also the dividend side of things. For example, this one, I'm down over 90 to basically £900. Recently I was down around, I think, 1,400, 500, whatever it was, but now it's actually come back a little bit. So I think it's up about 8% since the beginning, for the last 2 months, which is absolutely fine. I'm going to sit back and collect that £192 every single month from between now and so. And in the long run, I might get rid of this. And the reason I said that is because I like Procter & Gamble and I like Hershey, but this one, I'm not sure. I think there are other companies in the same sort of a sector that sell products, basically, like, for example, if you go to Asda's and Tesco's and so on, they have the store brands, and if we're in a recession, they rather buy that than actually brand names for that basically this company sells. And I don't know if the management are doing great. I think the debt levels is not great either. So I'm gonna potentially sell this one and buy more of these two or any other company that are out there. But I do like these two here, and as you can see here, this one is actually fairly valued at the moment, and according to Simply Wall Street, it is actually undervalued by 44%. So they're expecting price to be £80 per share. If it hits that, then I will be very happy, inshallah. But we will see. I'm not saying I'm gonna buy it sell it next week or week after, but in the long run, probably a year or so from now on, I might actually get rid of it, because the growth is not there. I was hoping that it will have a bit of a growth, bit of a dividend and so on, but that does not happen. And again, you'll make those kind of decisions, and then later on you realize, okay, this is not what I expected from the company. Procter & Gamble has been solid over the last couple of years. As you can see, I'm up about $778, £78, 34 shares. I wish I bought more when it was trading it cheap, but right now it is very expensive, so I'm not touching it. I'm going to leave it alone. $140 per share is my target, and just to quickly show you, I think 140 is where my target, so 141 is my basically average price for that company. Right, moving on to the next sector. Oh, by the way, this one I'm not buying it now because I've got those 40 shares, and until the cocoa price start recovering, I don't think this company is going to bounce back. If it goes below 180, then I will be adding more. Right, the next one is my other favorite sector, and that is the healthcare. And I've got 4 companies here. I've got AstraZeneca, which has done absolutely amazing. I don't know if you remember when this company was very much undervalued. We were buying weekly to, every single month I was adding to it. And look at it now, it's actually done quite well. We are up about basically closer to £700. We're receiving over closer to £100 in dividends. It's fairly valued right now. According to Simply Wall Street, it's 48% undervalued at the moment. But I'm gonna hold it because $109 per share is £109 is my target for this company. If it hits that, then potentially I will be adding more to it, because I really like the company, and the fact that it's UK based is also very nice. So yeah, the £109 is basically my target for that one. J&J potentially will be leaving the portfolio, and the reason I say that is because the growth is not there. The dividend has not been great either. On top of that, we've still had that issue with the lawsuits and so on, that I think they've settled quite a few things, but I don't know if that's still ongoing, so I need to do a little bit more digging. We are up right now about £200, and we're receiving over £128 in terms of dividend. There are other companies that I can invest in that potentially will give me similar sort of a dividends that will probably be safer, or maybe even put it into some of the high growth companies. I'll let you know exactly what I'm doing, but I really like the business. It's one of my favorite companies out there, but I don't like that lawsuit that's going on at the moment. Merck's been in the portfolio for donkey years, and I really like the company. I wish I bought more. I'm up about almost £900 right now. The dividend is basically, it is what it is, £53 right now, but I love that growth side of things. So it is done really well for me, and I'm going to hold on to it until it hits $78 per share, and if it does, then I will be buying more. Medtronic is another one that has I've been buying heavy for quite some time. I think now it's basically right now I'm down only 146. I say only because there was one point I was down about £700, so it has bounced back quite a bit. In fact, let me just have a look at where it is right now. I think it was 80 something. I think I'm down because of the FX impact. I think there we go, otherwise I would have been up. I would have been up at least to 1%, but I'm down because of FX. It doesn't matter. $88 per share is when my target, basically 89 right now. So it will bounce back at some point. I'm going to hold on to this one. I like the dividend. I like the growth side of things. It's done well over the last whatever years, but I just want to see. Yeah, I'm going to leave it. I'm going to leave it for at least another year or so. But I think J&J might be the one that's leaving when it comes to that sector. Right, the next one, it's the only company I own in the consumer discretionary. I really should be buying more consumer discretionary companies, but I haven't. But I've got Home Depot. Home Depot is one of the best companies out there for me. I really wish I bought more when it was trading very cheaply. £744 is what basically where we are in terms of total gains. £80 is what we receive every single month. It is expensive right now, and I'm gonna hold on to basically $300 per share is where I want it to be, and it's not far off. Although this is like a consumer stables, they don't really move much, but if it comes down below 300, I think I will definitely be adding more, inshallah. Next one is one of my favorite sectors as well, industrials. I think I own four companies, sorry. Automatic data processing, Cummins, UPS, and Union Pacific, and all of them done absolutely amazing job apart from this one. And this one there's a lot of issues with, of course, in terms of the unions and all sorts of things, and I'm down about £1,600 right now, but the other three absolutely done absolutely amazing job. Check this out. For Cummins, you probably never even heard of this company, what they do, but look at it right now, $936 per share, pounds up, and £75 is what we receive every single month. It is expensive. I wish I bought more. I'm definitely hold on to all of these companies. I like all of them. I love absolutely Union Pacific. It's not going anywhere anytime soon, so we'll hold on to it. We'll see what happens. UPS, we are buying, so I'm going to continue buying, inshallah. I'm going to get to at least 60-70 shares, reduce that basically the loss right now, and then increase my dividend as well. And I don't think this company is going to go away anytime soon, despite what people are saying with Amazon delivery and all of that stuff. I don't think it's going to disappear overnight. Right, so let's move on to the next sector, and that's the material. And I do have three companies in there. That is automatic data processing, air product and chemicals, and Lint, as well as Rio Tinto. Now these two absolutely really great. This one, like I said, I'm gonna give it, I've said this in many videos, I'm gonna give it for another year to see if the free cash flow improves. If it doesn't, then we are getting rid of it, and we are up right now about £273, and I'm definitely gonna get rid of it. I like the company. I don't want to get rid of it, but if the free cash flow does not improve, then I'm gonna take my 5,000 plus and use it somewhere else, inshallah. Potentially buy more of this, because this was one of the companies that was still undervalued at the time, but at the time I started buying, but it's gone up so much. Now it's about 10% premium right now. But yeah, I'm gonna hold on to it. I'm not gonna touch it. As you can see, my target is £412, basically $412 Let me show you where is it. Here we go. And yeah, 455 is where it is now, so not far off. Rio Tinto is another company that I've always said it is there for the dividends. Okay, they of course is a mining company, iron ore, all of that stuff. I don't know much about it. It's of course a lot of it depends on China right now, because China manufacturing, all of those things, if it starts booming, then of course this company does well. It is UK based. I love that. I bought 100 shares. I said I'm not going to add to it. I'm going to continue holding on to it, get my £340 a year in terms of dividend. So I'm not adding to it. I'm just going to leave it alone. If it hits below my price target, £51, let's see where it is now. Oh, okay, so it is actually, I'm down about 12%. Okay, 600. So potentially I don't know. We will see. I'm not sure whether I should include it. I've always said I'm going to buy 100 shares and leave it alone, and that's exactly what I'm going to do. And I'm going to leave it for now. Okay, the next one is, whoa, I've got 4 of these companies. Interesting. So I've got 4 companies when it comes to financials. I never thought I would be actually having any financials in this, basically in this portfolio, but there you have it. Visa and MasterCard, one of my all-time favorite companies, as well as S&P Global. These 3 companies, I really like them. And look at the basically where we are now. MasterCard is actually coming back again, so I'm slightly in the basically in the red right now. Both of them are fairly valued at the moment. I am buying more MasterCard, inshallah. Starting next week, I will be adding to it, inshallah, every basically weekly. I have bought more. Actually, it's not 10 shares. I think 10.7 shares. That's what I should have, because I recently bought some. There we go. 10.7 shares of this company. In terms of $465 is basically my average right now. So yeah, 465 is basically where it's at, but I will be buying, inshallah. S&P Global, I'm not going to touch it. I'm up quite a lot, and same goes for MSCI. Remember this company when it was actually down quite a lot, and now look at fairly valued still. But yeah, I'm not gonna add to this one. I really like the business model. I'm gonna hold on to my basically 10 shares and just see what happens, inshallah. Right, next one is the other only energy sector company that I do own in this portfolio, and I'm buying this one every week. So I've been buying it here and there every single week. I want to build a nice portfolio. This company has excellent free cash flow. It's been one of the best companies when it comes to basically the energy sector. So I'm gonna hold on to it. I'm just gonna buy every single week as much as I can. The next one and the final one is the ETF. The ETF, like I've always said to you guys, my plan was to buy every single week. I haven't done that, but inshallah, starting next week, I will be doing that. So I want to buy 1 share every single week and leave it alone. That is the entire portfolio. Now, you might be looking at this is too much to manage. Sometimes it is, but I really enjoy it. I genuinely enjoy it, and there are some great companies, or look at the financials companies that are doing absolutely amazing. I really love them. In terms of the basically tech companies are doing really good. Healthcare has done well for me. Overall, this is where we are. Okay, so right now, basically in terms of income, we're expecting 2,195. We've seen that already. Unrealized gains over close to £10,000, and that's how much we've invested. Now I'm going to continue doing this. I'm going to continue buying high quality businesses. I will make some changes. I will make some mistakes. I will, of course, make those things, because I'm human and it's going to happen. But I'm going to share my journey with you guys. Whatever you see here, you don't just see it on a spreadsheet. You will see here. You will see every single week. Every single company that is in this portfolio, you've seen it. You've seen them basically go down. You've seen them go up. And I share that with you guys every single week. Why am I doing that? Hopefully to help 1 or 2 people out there who are basically struggling in terms financially, and they want to get out of that situation, those rat race situation where you want to put something for the future, inshallah, for your kids, for your families, and so on. So I'm going to continue sharing this. I know this video is a bit too long, but I really wanted to share with you guys all of this information, because it is important that you know where my head is at right now as we speak, because the market is actually not doing great in terms of just been going up and up, and now we're basically seeing a tiny bit of a dip. If we see, there's not much opportunities out there, to be fair, right now, but a lot. If in the next few weeks, if we see another 4-5% dip, so if we see, for example, another week of this when it comes to the S&P 500 and so, then it might be a good idea. It might be, we might get a good chance. For example, the Nasdaq, okay, that 6% drop in 1 week. If we see that basically next week, we might see some of these companies here hitting that target of basically our price targets, and that will be good things for us, because that's the time to buy. Because I bought some of these companies, the ones that are up. For example, Broadcom, I was buying when this company was trading PE about 14. If we look at it right now, I promise you, I used to buy it a lot, and then all of this madness AI came along. So right now, look at the 28 forward PE. When you look at the valuation and you look at the last 5-year average, it's about 19. Why? Because a lot of the time when I was buying, it was actually trading below 14, 15 every single year. So we will get opportunities, but when we do, we don't panic. We buy more quality companies and we leave them alone for the long run, inshallah. I hope you enjoyed that. And if you did like the video, subscribe, make sure that you share with your family and friends, and join us in the Patreon account, please. It helps massively because there's a lot of websites that I use to do a lot of the research that I do for you guys. So it will be helpful, you know, they're subscription based, so I have to pay for it. So join us so it can help you guys, inshallah, in the long run. And of course, inshallah, so we can reach more brothers and sisters out there and help them. Anyway, have a wonderful day. Assalamu Alaikum.